Hey, it's Jeff Garber, mortgage expert and mortgage interest rate guru. Today is Wednesday, April 6th, 2022. I want to give you a weekly mortgage interest rate update. And as a disclaimer, everything I'm sharing with you now is for informational purposes only. These are not rate quotes. If you need a rate quote, you need to speak to a lender and get an official rate quote. So what's going on in the markets? Well, nothing great. From week to week, I've been telling you that mortgage rates have been rising. And one little side note, it took 3 years for mortgage rates to get to their all-time lows. And we've since almost in 3 months have given up almost all of that to get back to where we were before we started the run. So rates are increasing quickly. And the reason why is mainly because of the Fed and comments that they've been making daily. And those comments are affecting investors in both the stock market and the bond market. And right now, the information that they're sharing with us is not bond friendly. Now, mortgage rates, as I say from week to week, come from mortgage-backed securities or mortgage bonds that trade in the bond market. And that's what you're looking at here. If this is the first video that you're watching, pretty simple. Red is a bad day, green is a good day. And the way the bond market works is as prices go down or they sell off, yield or interest rate rises. So you can clearly see pretty much from the beginning of the year that bonds have been selling off. So we see a lot of red and a sharp decrease in the bond price, which means a sharper increase in mortgage rates. And we've had a couple days where we've tried to regain our footing and maybe gain some momentum, but that has all since been evaporated since the Fed likes to speak daily. And again, what they're saying is not very bond friendly. So you saw yesterday a sharp sell-off, and this was specifically tied to one of the members of the Fed. And she simply stated that she's hoping for an aggressive runoff of the Fed's balance sheet. And all you need to know from that is that would not be good news for mortgage rates. Today, we started off even worse than yesterday, but we actually turned into a green candlestick as of the time I'm recording this, which means we've actually recuperated and have gone the other way, which is a good sign. And if we could continue with these green candlesticks and maybe get a few good days of green run-up, then we could see rates maybe come down a little bit and stabilize. But right now, we are in an uptrend for rate. We don't know when that's going to end. We just have to deal with it. And every uptrend in interest rate will eventually lead to a downtrend, which would eventually lead to a refi boom. So if you are purchasing, in this time frame or today or in the spring market or summer coming up and you have a higher rate, more than likely that won't be forever. And if you do it right and lock in the right way, chances are you could probably refinance in a year or two when rates come back down again. So don't feel that because you lock in at a rate today, that's what you're going to have for 30 years. There will be opportunity to possibly get lower rates down the road. Right now, we have to deal with what we're dealing with. And again, most of it's due to inflation being high and what the Federal Reserve is going to do about that. Those are the main catalysts right now that are controlling why rates are going up. There's lots of little things going on. A not so little thing, Russia, Ukraine, but that is affecting it as well. And then we have the Fed and what they talk about every day. So I don't want to go round and round in circles here, but we do want to be careful. We did cross over into the fives. So we're in that threshold right now. We're going to keep an eye on that. That's for 30-year fixed. I will be back in touch with you next week. If you'd like to comment, please do so below. If you'd like a consultation with me, you can also set that up. All right. Have a great day.